From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for May 31st, 2018. Today we're taking a look at the AUDUSD Australian versus the US dollar. For today's trade analysis, this currency pair for quite some time has been in a downtrend. You can see that along the black trend line on the right hand side of the chart, but we have reached a significant low down here into the mid to low 74.50, 74.25 is the green zone at the bottom of the chart, bottom of the little blue trend line that you see over here on the right hand side. It's been in a period of ranging and congestion for a couple of weeks here between the green, pink, and the yellow shaded area. Yellow zone important today, 75.50 up to 0.7575 is and has been resistance for quite some time. What's important is the fact that we are pressuring above 75.75 and that yellow zone today. We're looking for an opportunity for a breakout and potential short-term or even long-term reversal of the Australian dollar as it pressures through 75.75 and the potential for it to rally all the way back up into the mid 7600. 76.35, 76.55 is the orange shaded area that sits up here closer to where the black trend line is. If you look back to the left hand side of the chart, the black circle shows that above the yellow shaded area there was resistance at the orange shaded area, 76.35.55. That's important for us. And then you go back here to the green circle, you can also see congestion, resistance, support between the yellow and the orange shaded area. So we know that if it can successfully break through the yellow zone, there's a good chance that it takes a turn all the way back up to the orange shaded area as our next resistance. Let's take Fibonacci. I'm going to take the old Fibonacci off here and pick Fibonacci from the highest high down to the lowest low of our current downtrend that we've been in, the black trend line. So lowest low, highest high, make sure I get it right on there. And that puts the 236 fib right at 75.83. Well, we're pushing through that right now, just through the top of the yellow shaded area. By the way, the 382 of that downtrend sits all the way up here into the upper 76. 76.88 is actually where the 382 sits, closer to this blue zone. So there's still some room to go above the 236, the 382 closer to the blue zone, above the yellow zone, the orange zone. So there's room to go as it tries to and attempts to break through this resistance. Again, we need to see maybe a weaker dollar. Dollar needs to slump back, pull back a little bit more than it has. Strength in gold will also help drive this back higher again as well. So we're watching all of that as a potential. But right now we're watching for the setup of the breakout. Let's go ahead and zoom it in on this blue the blue box, the yellow shaded area. Again, resistance all along here into the 75.80 or so level. We've seen resistance. We don't want to fall prey to a false breakout. This right here was a false breakout. You can see it got above right here with a black circle. It's got above and then suddenly turned back around. We don't want that to happen. We don't want to assume that this is a blue candle. It's going to go up. It's going to break through 75.80 and go higher. We want to see some evidence, increased evidence that it's going to do that, give us higher confidence. For me, I'm going to wait for a full candle to be above the yellow shaded area. It doesn't need to be a red or blue candle, doesn't matter. I just need a candle, full candle above here to give me higher confidence that we're going to see it pressure back towards the orange zone. So that's what I'm waiting on, a full candle above the yellow zone, targets back to the orange zone, because suddenly if we were to assume it's going up and the US dollar suddenly surges again, we see this go back down, we're going to be kind of unhappy, just like we would have been back here with a black circlet. So let's wait for the real deal breakout before we assume it's going to continue to pressure higher. Take it down to the 4-hour time frame. Now again, back there where the black circle is, you can see even here on the 4-hour, we got some opens and closes above, some clear single candle bodies above the yellow zone. So let's be cautious. Let's wait for the right opportunity. Sure, the current candle or even a few candles could get above here, but I want to be sure that this is going to be the real deal breakout. I'll have increased confidence if it breaks out on the daily time frame, but we may get our first clues of that here on the 4-hour time frame for the Australian dollar, pushing through 75, 75, 75.80, back towards the mid to low 7600s for the Australian dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.